In today's fast-changing world, the defense industry is undergoing one of the most powerful transformations in modern history. With global tensions rising, governments around the world are pouring billions into defense, cybersecurity, and artificial intelligence to strengthen their national security and technological edge. And for investors who understand how to spot opportunity before the rest of the market catches on, there's never been a better time to look at defense stocks trading under $10. So today, we're diving into 4 defense stocks under $10 that have the potential to make you rich in 2025 and beyond. These are not random picks or speculative gambles. These are real companies backed by solid fundamentals, cutting-edge innovations, and strong Wall Street interest. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks shaping the future of defense and AI. First on our list is Veritone Incorporated, trading under the ticker symbol VERI. Veritone is a leading artificial intelligence company that has carved a powerful niche in the defense and public sector technology landscape. What makes Veritone special is its proprietary AI-aware platform and AI operating system that allows multiple machine learning models to interact together to analyze large amounts of unstructured data like audio, video, and text. In simple terms, AI-aware can listen, watch, and understand content in real time. This makes it extremely valuable to defense agencies, law enforcement, broadcasters, and corporations that deal with massive volumes of intelligence or media data. The company's AI-powered tools are already being used for surveillance analysis, digital evidence management, and real-time decision-making support. Its growing footprint in the government and security sector is helping it stand out as one of the more promising small-cap AI stocks tied to the defense world. Financially, Veritone's latest quarterly report paints the picture of a company in transition, but improving in key areas. For Q2 2025, Veritone reported revenue of over $24 million, flat compared to the same quarter in 2024. While the top line was stable, the underlying performance showed strong momentum in high-value segments. Software products and services revenue surged more than 45% year-over-year when excluding Veritone Hire, a division the company is de-emphasizing. Its public sector revenue grew more than 90% compared to the previous year, demonstrating massive demand for its AI solutions among government clients. Meanwhile, commercial enterprise revenue also improved by about $0.8 million year-over-year. The only real decline came from its managed services unit, which fell by $1.9 million due to weakness in representation services, a legacy business that Veritone has been strategically phasing out to focus on its AI software. Veritone posted a gross profit of $15.3 million for the quarter, slightly down from $16.4 million last year, while maintaining a solid gross margin of 63.9%. Though this was lower than the previous year's 68.2%, it remained strong for a company still scaling in the software space. Operating losses were $19.3 million, an improvement of 5% year-over-year, showing progress in cost control. On a GAAP basis, the company reported a net loss of $26.8 million, up 14.5%, but its non-GAAP net loss improved to $8.7 million from $9.7 million the previous year. Veritone ended the quarter with $13.9 million in cash and restricted cash and has significantly reduced its debt to $128 million, down from $201 million in 2021. For guidance, the company expects Q3 2025 revenue between $28 million and $30 million and full-year revenue between $108 million and $115 million, signaling renewed growth momentum. At a current price of $7.18, Veritone is still trading well below its long-term potential. According to 5 Wall Street analysts, the average 12-month price target for Veritone sits at $10.80, with a high forecast of $26. That's a potential upside of over 50% from current levels. Second on our list is BigBear.ai Holdings Incorporated, ticker symbol BBAI. BigBear.ai is one of the most talked about companies in the defense AI sector, known for providing advanced analytics, machine learning, and autonomous decision-making solutions to the U.S. military and government clients. The company focuses on enabling what it calls decision dominance, giving organizations the ability to process massive data sets and generate actionable insights faster than ever before. Big Bear AI's technologies are used for mission planning, logistics, and intelligence analysis, areas that are vital to military operations. With AI now becoming an integral part of defense strategies worldwide, from a financial perspective, Big Bear AI's Q2 2025 results show a company navigating short-term challenges while building a strong foundation for future growth. The company reported revenue of $32.5 million for the quarter, a decrease of 18% from $39.8 million in Q2 2024, primarily due to lower volumes on certain Army programs. Despite this, Big Bear AI's backlog remains robust at $380 million as of June 30th, 2025, indicating a strong pipeline of future business. Gross margin came in at 25%, compared to 27.8% last year, reflecting short-term cost pressures. However, the major headline number, its net loss of $228.6 million, was largely inflated by non-cash items. The loss was driven primarily by a $135.8 million adjustment related to changes in derivative liabilities and a $70.6 million goodwill impairment. Excluding these, the company's operational performance was more stable than it appeared on paper. On a non-GAAP basis, Big Bear AI reported an adjusted EBITDA loss of $8.5 million, compared to $3.7 million the previous year, mainly due to higher R&D spending as the company continues developing new AI capabilities. SG&A expenses decreased to $21.5 million from $23.4 million a year earlier, showing management's commitment to efficiency. Importantly, the company's heavy investments in R&D today are aimed at expanding its long-term technological edge in the defense AI sector. These are strategic costs that could translate into significant rewards down the line as AI becomes the backbone of defense operations globally. At a current stock price of $7.05, Big Bear AI remains an attractive small-cap play for investors seeking exposure to AI in defense. Analysts see potential upside as the company converts its large backlog into revenue and leverages its analytics expertise to secure additional government and enterprise contracts. As the demand for AI-powered defense analytics grows, Big Bear AI's predictive and autonomous systems could make it one of the most valuable mid-cap defense stocks of the decade. The third stock on our list is Redwire Corporation, ticker RDW. Redwire is a rapidly growing aerospace and defense company that focuses on space infrastructure, advanced manufacturing, and in-space servicing capabilities. The company's technology supports some of the most complex space missions in the world, from satellite manufacturing to space station development and defense communications. Redwire's expertise in deployable structures, power systems, and digital engineering makes it a key partner for NASA, the U.S. Department of Defense, and major commercial space contractors. As the global space economy heads toward an expected trillion-dollar valuation by 2035, Redwire is positioned to play a major role in building and maintaining the infrastructure that powers both commercial and defense space operations. Financially, Redwire's Q2 2025 results reflected a challenging but transitional quarter. The company reported revenues of $61.8 million, down 20.9% from $78.1 million a year earlier, mainly due to program delays and unfavorable cost adjustments on certain contracts. The company's net loss expanded to $97 million compared to $18.1 million in the same quarter last year, but this was largely due to more than $90 million in one-time charges. These included $29.6 million in equity-based compensation tied to the Edge Autonomy acquisition, $16.6 million in transaction costs, $25.2 million in unfavorable contract adjustments, and $20 million in non-recurring interest expenses from debt repayments. Excluding these items, the company's underlying operations are stronger than the headline numbers suggest. Its book-to-bill ratio remained at a solid 1.47, meaning Redwire continues to receive more new orders than it completes, an important sign of growth momentum. Redwire ended the quarter with $113.6 million in liquidity, up significantly from $55.8 million a year earlier, giving it financial strength to weather short-term challenges. The company is still investing heavily in R&D and integration following its recent acquisitions, but these moves are expected to enhance long-term profitability. Analysts remain bullish, with an average 12-month price target of $16.58, implying over 107% upside from its current $8 price. As Redwire continues expanding its presence in space-based defense, digital engineering, and advanced satellite systems, it could quickly evolve into one of the leading small-cap players in the U.S. aerospace and defense industry. Last on our list is Red Cat Holdings, ticker RCAT, currently trading at $11.15. Red Cat is an American drone technology company that's becoming a rising star in the defense sector. The company designs and manufactures unmanned aerial and surface systems for both military and commercial use. Its focus on autonomy, surveillance, and defense-grade manufacturing has made it a key player in the growing drone defense market. Red Cat's products are increasingly being used for reconnaissance, border security, and tactical missions, and its AS9100 certification has validated it as a top-tier defense supplier capable of meeting rigorous aerospace standards. Financially, Red Cat reported quarterly revenue of $3.2 million and ended the quarter with $66.9 million in cash and accounts receivable. While its revenue base is still small compared to giants in the industry, its high-growth trajectory and focus on advanced defense technologies make it a prime candidate for rapid scale. With increasing global focus on drone technology and autonomous warfare, Red Cat's innovations in uncrewed systems could position it as one of the major beneficiaries of rising defense spending. Analysts are optimistic as well, giving Red Cat an average price target of $16.50, with forecasts ranging from $16 to $17, representing nearly a 48% upside from current levels. As Red Cat continues to integrate advanced AI into its drone systems and secure more defense contracts, it could see rapid expansion in both market share and revenue. Its strategic position in the unmanned defense market makes it a strong contender for investors looking to capture the explosive growth of military robotics and AI-driven surveillance systems. Well, that concludes our list of the 4 best defense stocks under $10 that have the potential to make you rich in 2025 and beyond. From Veritone's AI-powered data intelligence, to Big Bear, to AI's decision dominant systems, to Redwire's advanced space technologies, and Red Cat's cutting-edge drone defense solutions, each of these companies represents a unique opportunity to ride the next wave of defense innovation. They may be small-cap stocks now, but with the growing intersection of AI and defense spending, these names could become tomorrow's industry leaders. Remember, the defense sector is evolving faster than ever, and those who invest early in innovation often reap the biggest rewards. So always do your research, stay informed, and never underestimate the power of emerging technologies in reshaping the future of national security and global markets.